Not that long ago, cryptocurrencies were a curiosity, viewed with enthusiasm by a small group of early investors, and a heavy dose of skepticism by the broader mainstream investment community. All that has changed in recent years, seeing cryptos come to the forefront of mainstream financial markets. Crypto bulls will be the first to tell you just how far the market has come. But just how much runway did assets like Bitcoin really have over the past few years? This is Crypto 2021, Decrypting the Digital Currency Trade. Hey guys, I know it's been a while. Did you do something with your hair? You look great. If you're a longtime follower of mine, you've probably noticed that I haven't quite delved too much into the space that I am talking about today, but it is one that I've been paying attention to more keenly, particularly by the end of last year when the biggest surge ever was underway. I was at BNN at the time as a chase producer and digital producer, largely booking guests on the show that were very bullish about crypto, sometimes even skeptical. And I was writing a lot of these analytical pieces based on opinions that many analysts brought to the forefront. Also, I'm saying BNN Bloomberg at the time because more recently, big news, I've joined Financial Post as a full-time reporter. Thank you. But not only that, I've also got a beat. You are looking at one of their finance reporters. That means I cover topics like wealth management, mortgages, financial tech, bonds, and, as you might have guessed based on today's video, crypto. You can check my writings on cryptocurrencies at financialpost.com, where you can also find links to subscribe to newsletters that are also in the description below. And you can also check my website, stephaniehughesjournalism.com. You lovelies. Full disclosure on this crypto topic, I don't actually own any of the coins I'm going to be talking about, but I do have a few positions in a Bitcoin ETF. So, transparency for you. But enough about that, let's go talk about crypto. Before we do a deep dive on how each of the cryptos performed this year, let's check out what we have in our little coin collection here. Bitcoin. It is the granddaddy of cryptocurrencies, being launched in 2009 through the pseudonymous programmer Satoshi Nakamoto. One of the most interesting topics around Bitcoin to me was this ongoing debate on whether or not Bitcoin functioned more like a currency or as a collectible asset that we just called currency, kind of like gold. The argument for it being a currency is that it's had an ongoing growing adoption rate among companies like, for example, Tesla. And the argument for it being a collectible is that given its fast-moving value, investors might feel less inclined to spend it and perhaps more inclined to hold it. I mean, why spend something if it can just immediately escalate in value next week? I mean, remember, nobody really wants to be that poor schmuck that ordered 2 Papa John's pizzas for about 10,000 Bitcoin, which by today's Canadian dollar standards would be about 412 million. Another thing you should know about Bitcoin is that there's a few ways you can invest in it. You don't have to buy an entire Bitcoin. For example, you can actually buy a partial Bitcoin using platforms like Coinbase or Robinhood, among many others. Or you can invest in a Bitcoin tracking ETF. Here are a few. Bitcoin also has a finite supply, being capped at 21 million Bitcoin. That means once all these Bitcoin are mined, that's it. Technically, the protocol could be adjusted to allow for more Bitcoin to be entered into circulation, but for now, your magic number is 21 million. Ethereum. In crypto circles, it hasn't quite caught the same spotlight as Bitcoin, but it has its use. It's usually caught in Bitcoin's shadow, but it started to get some attention when it was reported by Reuters that it actually outperformed Bitcoin in early May on year-to-date gains. The short description for Ethereum is that it's exchanged on the open source Ethereum blockchain network. In short, it's a platform that works outside of a single entity's control to exchange technocurrency with goods and services. If that explanation was too reductive for you, then I will broaden it out by saying that Ethereum is a currency that acts as a fuel that operates smart contracts on the Ethereum blockchain network. One notable advantage that it has over Bitcoin is that Ethereum is not actually capped. Its supply is continuously determined by members of the community. However, Ethereum is not without its traffic jams. Back in 2017, it had been severely bogged down with trade congestion during the whole CryptoKitties craze. Try saying that 3 times fast. I bet you could. I believe in you. It's a sort of game that allows users to collect, breed, and sell their own little virtual cats on a blockchain network. It is probably the cutest web crash you're gonna get. There have been other virtual animal breeding games like this one, most notably Zedrun, which allows you to buy, trade, breed digital horses using Ethereum and non-fungible tokens. That is an entire video on its own. Dogecoin. This coin really stole the show in the first quarter of 2021, mostly because it was backed by a lot of celebrity endorsements, most notably Elon Musk, but we'll get to that in a second. This Shiba Inu meme-inspired coin first cropped up in 2013 as a joke in response to the amount of altcoins or obscure crypto assets that were cropping up on the market at the time. It doesn't have a hard cap on it, but it does limit the amount of coins that's brought to the market to about 5 billion tokens each year. It's got a market cap well into the billions, but it really went on a tear when the meme-addicted CEO of Tesla, Elon Musk, really started pumping it up on Twitter. The meme community was going wild. That all came to an end after this Saturday Night Live moment. Musk sent Doge on another wild ride with 2 tweets to clear the air, saying that he's working with developers to improve system transaction efficiency. As of the day I finished writing this script, Doge fell about 71% since this appearance. And then you've got a bunch of other types of crypto. I've been paying attention to stablecoins, which ties its value to an underlying asset, and altcoins, an alternative coin that separates itself from your garden variety crypto. Alright, now that we've got a better sense of what cryptos we're working with, let's see what their price movements were. So the thing about cryptos and the thing about covering cryptos is that their value has a lot of whipsaw volatility. That means by the time I have fully shot, edited, rendered, and published this video, it's quite possible that the value and market cap of the coins I'm about to talk about has changed quite dramatically, so please keep that in mind. Also, I'm basing these figures off of CoinDesk. Also, I'm using Canadian dollars, so all apologies to US viewers who may happen upon this. Anywho, Bitcoin has had the most runway of all the cryptos, and also has had some of the most staggering gains and losses. Since it entered circulation, it's been pretty subdued below the $1,000 mark, except for a few blips in 2014 when it kind of popped above for a brief moment. It wasn't until midway through 2017 that it saw its first price surge, a jump of over 1,700% from the beginning of January to a nearly $24,000 peak in mid-December that year, before it came back down over the course of 2018 and settled in the lows of a $4,000 to $5,000 range for the first half of 2019. This also meant that graphic cards, which Bitcoin miners used for Bitcoin mining, suddenly got stupid expensive, much to the chagrin of a lot of these computer programmers that like to develop their own PCs. Given that Bitcoin's price surges brought a lot of renewed interest in not only Bitcoin but the broader cryptocurrency space, it's no surprise that a lot of other cryptocurrencies like Ethereum sort of follow a similar price trajectory as Bitcoin had. Bitcoin saw some volatility in the ensuing years, but it wasn't until late 2020 when it saw its record surge of $79,000, which was more than tripled the amount of its last peak. There were also a few analysis pieces trying to figure out why there was a sudden demand for Bitcoin. Some pieces sort of pointed out to a change in the supply and demand dynamic. More specifically, at Chainalysis blog, they pointed to a decline in the supply of liquid Bitcoin. That is, Bitcoin you can trade for goods and services or just turn into cash. This isn't to say that the supply was lost, it was just categorized as illiquid Bitcoin, which by November 2020, at the time of this article's writing, made up about 77% of the 14.8 million Bitcoins that were mined. This article, and very well the rest of the news cycle, were trying to pinpoint what made this surge different from the 2017 surge. Most notably, it was that Bitcoin was now being embraced by institutional investors, not just a bunch of niche investors that happen to know a lot about computers. These same mainstream investors were piling into crypto in droves, with a significant increase of high-value transfers sent from exchanges, according to Chainalysis. So, what's driving the surge anyway? And why are people now suddenly willing to throw absolute dollars into something they were utterly skeptical about just a few years ago? Let's find out. "2020 was the year for pretty much all cryptos, seeing more celebrity endorsements, millionaire and billionaire support, group enthusiasm, as well as broader acceptance from institutional and mainstream investors. We all know why the pro-Bitcoin investors are in the fray. The so-called Bitcoin bros have never doubted the currency for a second. Celebrities and millionaires all have their own reasons for embracing the coin, whether it was to rile up the same amount of enthusiasm they had for crypto, try to join into the great gains, or were just frank about why they included it in their portfolio, usually as a means to diversify. But the institutional investors were a more interesting story, especially in 2020. Many of them piled into the currency as a way to hedge against macroeconomic uncertainty, and a global pandemic will certainly bring uncertainty. Imagine that. But could Bitcoin, Doge, and Ethereum be broadly accepted as currencies? Bitcoin might have a harder time convincing the broader financial world that it is a solid contender as a currency, largely because of its supply cap, its regulatory crackdowns, particularly from China, and its rip-roaring price volatility, and that last one is a huge one. That said, it certainly captured the imagination of a few, including Tesla Inc., which stated closer to the beginning of the year that it would begin accepting Bitcoin as currency and payment for its vehicles. CEO Elon Musk quickly walked this back amid growing concerns of Bitcoin's environmental impact on the mining process. He has a point here, and I'll dive deeper into Bitcoin's environmental impacts later on in the video. It's not just companies turning their attention towards cryptocurrencies. El Salvador President Nayib Bukele put forward a motion to have Bitcoin adopted as legal tender in June. The Bitcoin law was passed with 62 votes, mandating that businesses with the technological capacity must accept Bitcoin and that residents could trade with Bitcoin using their own crypto wallets. In a Twitter Spaces conversation, Bukele had some very strong words about what this adoption means for El Salvador and the advancement of Bitcoin, saying, "I think El Salvador is not only a country anymore, it's a symbol of what Bitcoin can do. If we can change our future, probably we will start seeing other countries follow. This will be a huge game changer, not for El Salvador, but for the world." The analyst I spoke to when I wrote the story for the Financial Post said that this will serve as a case study for other countries considering the same move. Other Latin American countries threw their support behind this decision, like Argentina, Paraguay, Panama, and Brazil. Even the head of the Central American Bank for Economic Integration said he'd give the country technical assistance to adopt the currency as legal tender, though El Salvador continues to issue debt in US dollars. They even have a solution for the carbon emissions problem, flirting with the idea of harnessing volcanic energy to power Bitcoin mining operations. Moving along, Dogecoin is sort of in the same adoption boat as Bitcoin, though unlike Bitcoin, Dogecoin doesn't have the same level of supply issues. Though it should be noted that it does cap the amount of new coins coming to market to 5 billion tokens annually. Ethereum is actively traded for digital assets and spent through decentralized applications, also known as dApps. According to Ethereum's website, these applications could gain you access to Ethereum financial services, which could buy you digital art and collectibles, games, and developer tools. Cryptos are being increasingly accepted in places like art auctions, third-party mercantile apps, and have also been accepted in some real estate transactions. bringing two big pandemic business stories together. One coin that's been in the headlines recently and really caught my attention is the stablecoin, a coin that pegs its value to an underlying asset that's supposed to be more stable, like a fiat currency, precious metal, and even other cryptocurrencies. Holding an equal value to fiat currency on a one-to-one basis makes stable coins, in theory, more of a contender to penetrate the financial system and see a more wider acceptance as an actual currency. And that's got central bankers nervous. The Bank of Canada's Deputy Governor Timothy Lane said that while stablecoins may play an active role in the financial system, there needs to be an adequate framework to keep consumers safe. Former Bank of Canada Governor Mark Carney suggested the same thing when he spoke to the Bank for International Settlements. He also warned against letting the private sector take the first move in this space and locking in existing advantages for tech companies in what he called the Uberization of money. Also, U.S. Federal Reserve Board Governor Lael Brainerd went into more detail, describing some of the risks that these coins could pose, saying, "Unlike central bank fiat currencies, stablecoins do not have legal tender status. Depending on the underlying arrangements, some may expose consumers and businesses to risk. If widely adopted, stablecoins could serve as the basis of an alternative payment system oriented around new private forms of money. There is a risk that the widespread use of private monies for consumer payments could fragment parts of the US payment system in ways that could impose burdens and raise costs for households and businesses." A feature from the Harvard Business Review argued that in order for stablecoins to be fully adopted, it needs to meet 4 conditions: appropriate technology, consumer demand, corporate champions, and an amenable regulatory environment. It further argued that 3 out of 4 of these conditions were already met, with the last domino to fall being the regulatory environment. However, getting that central bank's stamp of approval may pose a challenge among bankers who are already skeptical of a blockchain system. Speaking of adoption challenges, let's see what other obstacles cryptocurrencies will have to cross. The most pressing deterrent for would-be crypto believers is probably the price volatility. In fact, it was listed as one of the reasons in a report by DBRS Morningstar why crypto probably won't be winning over Canada's big banks anytime soon. And that volatility concern makes perfect sense. I can't imagine getting behind an asset that creates even more uncertainty. I can't imagine that a bank or wealth management firm would be particularly pleased if its gains in a certain asset were suddenly evaporated because of an SNL appearance by Elon Musk calling their asset a hustle. That's just the tip of the iceberg. Other concerns listed in that DBRS report include privacy-concerned illicit activity and regulatory hurdles. Which brings me to my next point. Regulation has been a huge part of the conversation, with governments and financial institutions showing reluctance in loosening their grip on currencies and the financial institution. Let's take El Salvador for instance. It's a country that strongly embraced Bitcoin and it was the first to do so. Taking on this decentralized currency provides a double-edged sword in the eyes of some analysts. On one hand, yes, it does give the country something to work with and makes it less reliant on the US dollar, their currency of choice after they retired their own national currency, the colon. On the other hand, they could risk having much less control over their monetary base and their ability to influence economic activities. If they get hit with a recession, they'll have more trouble pulling levers to, for example, make borrowing more accommodative for businesses trying to get back on their feet. And while some governments hem and haw over whether or not they actually want to take on the currency, you've got countries like China which are militantly opposed to Bitcoin. Government officials cracked down on Bitcoin mining, and in late June, the Chinese government introduced other measures. For instance, banks can't provide services with crypto. They have to be able to identify virtual currency exchanges and capital account with OTC dealers and cut off payment links for transaction funds quickly. Along with regulations, Bitcoin also has some serious environmental impacts. Remember when I said Elon Musk kind of had a point about Bitcoin's carbon impact? Well, here it is. Bitcoin carbon emissions have been growing dramatically along with its popularity, growing by over 40 million metric tons in the past 2 years, according to data from the Bank of America Global Research. If Bitcoin were a country, its energy consumption already surpasses a few smaller developed countries like Czech Republic, Chile, and Greece. Another challenge is to win over the skeptical institutional investors and regular folk who just don't see this as a game-changing investment. There have also been a lot of stories of folks losing a lot of savings in Bitcoin. There are also so many crypto scams out there that aren't actually bound by any regulatory body, so it could be quite daunting to invest in any form of crypto when there are so many bad actors out there. Crypto's got a long way to go. But we don't, so let's get to the end of this. When it comes to cryptos, there are still a few heads and tailwinds. But this has certainly been one of the most interesting years to follow the Bitcoin story, if not the most interesting year. As I was writing this script, Twitter was alight with crypto crash memes, which saw this bittersweet mix of people wryly poking fun at the amount of savings they lost, and others who were very hopeful that Bitcoin would rise again. And because it takes me so long to edit these videos, Bitcoin did rise again to over 55,000 Canadian by the time I'm recording this edited blurb, so here you go. I don't really have anything profound to say about crypto. I do think there's some use in the underlying blockchain technology. It could be used, for instance, in some business transactions, making real estate bidding process more transparent, among many other ways it could be used. Maybe tracking products and showing you where your products actually come from. That's one use. I'll continue to cover cryptocurrency, so if you're interested in a few of those, please subscribe to some of the FP newsletters below. I'll be in FP Finance every Thursday, where you may see a Bitcoin story or something covering my many topics in finance. While you're clicking around, don't forget to visit my website, stephaniehughesjournalism.com, and subscribe to my YouTube channel. And also, just be good to yourself. This is Stephanie Hughes, signing off.